Hello and welcome to the BizNews Breakfast Briefing. I'm Lucy Ferreira for BizNews.com. First up today, we'll be hearing from Alec Hogg with his overnight market report, followed by the daily news briefing from our partners, the FT in London. In top stories on BizNews today, Bain & Company continue to defend their actions in relation to state capture. The DA has announced that it won't support a joint opposition bid to bring a motion of no confidence against President Cyril Ramaphosa. And following the erosion of South African institutions caused by state capture, we have an article on how the South African Revenue Service is rebuilding itself. You can find the links in the show notes. Also be sure to keep an eye out for interviews with Nedbank CEO Mike Brown and Afrimat's chief Andries van Heerden. They'll be up on BizNews Radio later today. Alec, it's over to you on the markets.
Thank you, Lucy. Good morning. It's Thursday, the 18th of August. In the United States overnight, the S&P 500 index was down by 0.75% and the Nasdaq composite was down by 1 1/3%. It could have been worse. The Federal Reserve minutes were released afternoon time in the US and they gave the market a little bit of support after a pretty soggy day. It shows in the minutes that the Fed is still very focused on controlling inflation, but there was a discussion amongst the governors about the risk of raising borrowing rates more than was needed, causing unnecessary economic damage. And that is what helped the stocks. In other words, those people who believe that in September the Fed is going to raise interest rates by 50 basis points rather than 75 basis points, which would be the third time in a row, got a little bit of heart from that part of the conversation. The news media around the world will be keeping a very close focus on what happens at Jackson Hole this week. That's when central bankers from around the world, and obviously the United States, because that's where it is, get together to discuss the state of the world. We'll be watching that very carefully. An important issue about all of this is that technically minded investors are quite fixated on something called the 200-day moving average. This is a critical level. If the S&P 500 or the Nasdaq, or indeed here our own Johannesburg Stock Exchange all-share index or top 40 index is trading above the 200-day moving average, and if it comes towards it and bounces off it and goes higher, that is the signal that the market is being provided support by that very important line. On the other hand, if it can't break through that moving average line, it shows that whatever rally has happened could be unraveling. So where are we right now? I pulled out the latest numbers this morning, and it's incredible to see the Nasdaq composite is exactly at the 200-day moving average. It was way below 11,000. It moved up to above 13,000, breaking through that index earlier this month, but now it's sitting exactly on the 200-day moving average. If it bounces off, in other words, if we see an increase in prices today on the American stock market, then that will be a very positive sign. However, if there's a sharp decline, again, after the 1 1/3% drop yesterday, who knows? Watch out. Maybe the rally would be running out of steam. The S&P 500, on the other hand, is still sitting very comfortably above the 200-day moving average after breaking through also earlier this month. That moving average, if you're more specific about these things, is sitting at about 4,180, and the S&P 500 is at 4,274. So it's not a whole lot higher, but on the graph it actually doesn't look too bad. Oil last night went up a little. The Brent crude price rose from 92.77 to 93.74, so it's about $1 a barrel or 1%, but it is up off a 6-month low, so still well below 100. Oil analysts are now saying the number to look for is $75 a barrel. Once it gets to that level, or should it get to that level, it'll show that the oil price is now starting to normalize again. In China, lots of news coming out of there. Analysts reducing the forecast growth rate for the economy there down to 3% from the previous number of 3.3%. The Chinese Communist Party's plan has the economic growth at 5%. So it's well below the Chinese plan or the centralized plan for economic growth. And there are two reasons for this. The one that is most obvious is the closing off of the economy because of a zero COVID policy. The other one, though, is this housing crisis, which is now spreading from the much publicized Evergrande, which we had in global headlines all over the world. What they did was they sold apartments to people who paid for them up front, but now they don't have the money to actually build those apartments. And they've got other apartment blocks that nobody wanted to buy into, which were standing empty. The government has come out to guarantee that new bond issuers in property development will be given support or they'll be given a government guarantee on what they're trying to borrow if they meet certain standards of Beijing. But the rates that those property developers will pay is now well into double digits from around 2% a while before. So it kind of gives you an understanding of what's going on in the property market there. Some quite important South Africa-related news coming out of China is that Tencent, and this is the company that determines the share price of Naspers and Prosus, reported its first ever quarterly sales decline for the 3 months to the end of June. That's the first ever. It is impacted or is being impacted by Chinese regulation and the slowdown in the Chinese economy. You'd have expected that something like that would have put the share price under pressure. Well, not so. This morning it was up by 3%, so it shows that the market actually expected what was going to happen there. But not such good news for Naspers on another front is that its food delivery bet continues to be questioned. This after the biggest food delivery company in China went bankrupt yesterday. There's more on that from our partners at the Financial Times later in this bulletin. Coming back to South Africa, well, the JSE All Share Index was down by 0.8% yesterday. Traders woke up to the coal impact that we mentioned in this report Wednesday morning of the BHP results. Coal was the major reason, the only reason really, why BHP was able to shoot the lights out, up 26%, massive return on coal. We saw Kumba and Anglo American rising by 4% as a consequence of that. But yesterday, Wednesday, Kumba was down 6.5%, Anglo down 4.5%. They gave back everything as perhaps traders had a look and said, oops, we've been putting the wrong numbers into our spreadsheets. Anglo doesn't have coal anymore. Sasol fell by 6%, belatedly on the oil price decline. Sibanye was down by 6% as well. This was on a trading update where it said that profits will fall by half, 50% for the 6 months to the end of June. This is due to lower gold production in South Africa because of strikes, flooding in the United States, which affected its palladium output there at Stillwater, and lower prices generally. The weaker rand was not enough to offset that trifecta of bad news. The rand for the first half of this year trading at 15 Rand 40 as against 14 Rand 55 for the same period last year. But it is a signal that you can't just write in a increase in commodity prices or the stocks of commodity prices because of a weaker rand. If there are production issues that are more important, as we've seen in Sibanye, well, that will have an impact. As far as the rand's concerned today, it's weaker. Lost 24 cents against the US dollar at 16 Rand 65, 20 cents against the pound, back above 20. It's at 20 Rand and 6 cents to buy a single pound. And a sharp decline in the rand price against the euro. It's now going to cost you 16 Rand 94. That's a 26 cents drop there. The gold price was a little softer, $1,764 an ounce. Bitcoin was down by 2.5% at 23,482, and the Geltec basket, as a consequence, down by 1.5%. That's cost each unit is 456 Rand and 94 cents. As far as the BizNews portfolio stocks are concerned, only Apple and ABSA were higher yesterday, and then only just Apple about 1% better. ABSA just nudging a little higher, about 0.33%. There were some pretty hectic losses for the wild cards, in other words, the smaller tech companies that are in the portfolio. Spotify and Zero down by 5%. Tuyu Not sure what's going on there because there's supposed to be a bid on the table at $15. That went down below $8 a share. Zoom was down by 6% and Uber was down by 5%. The heavyweights, though, in the portfolio, Amazon 2% lower. That's just giving up a little bit of recent gains. And Microsoft was down by 0.5%.
Good morning from the Financial Times. Today is Thursday, August 18th, and this is your FT News Briefing. We have more signals from the Federal Reserve. It's still worried about inflation. UK inflation hit double digits and jolted bond markets. And China's biggest private company posted its first quarterly decline ever. Plus, a huge Chinese food delivery app has gone bust. And our reporter in Beijing is kind of sad.
So it was definitely one of our go-to apps for getting food.
I'm Mark Filipino, and here's the news you need to start your day. Federal Reserve officials discussed the need to keep interest rates restrictive for some time in order to rein in inflation. So say the minutes from the U.S. Central Bank's July meeting. That's when the Fed decided on a 0.75% rate rise for the second consecutive month. These latest minutes show policymakers are intent on pressing ahead with tightening despite some early signs the economy is cooling down. Markets barely budged after the minutes came out. The S&P 500 ended the day down about 0.75%. UK inflation jumped more than 10% in July, the first double-digit increase in more than 4 decades. The data out yesterday sparked a sell-off in the UK bond market. 2-year government bond yields soared. Here's the FT's Niku Asghari.
And so 2-year UK government bond yields, which are more sensitive to monetary policy expectations and expectations of interest rate changes, rose to the highest level since the financial crisis of 2008. And the expectation that interest rates will have to rise increases fears of tipping the country into recession.
So what's the outlook for the rest of the year?
The investors and the economists that I was speaking to were broadly saying that it's going to get worse before it gets better. They're all keeping an eye out for the next inflation figure and the Bank of England's next meeting in September to see how high they do raise interest rates. So short-term bond yields, which are more sensitive to monetary policy, are at risk of selling off even more if the numbers get even worse.
Niku, did the bond market sell-off in the UK spill over into other European bond markets?
Yes, the UK bond market sell-off did touch other European markets, especially Germany and Italy, whose debt was also under pressure. Because this fear of recession isn't isolated to the UK. There is a fear of recession in Europe as well, so everything is interconnected.
Niku Asghari is a capital markets reporter for the FT. China's economic slowdown put a serious dent in earnings at the country's biggest private corporation. Tencent is the big technology group that owns the messaging app WeChat and also owns almost half of the video game company Roblox. Tencent just reported its first decline in quarterly revenue ever. The company missed analyst expectations and posted quarterly revenue of just under $20 billion. Company earnings were also hit by a regulatory crackdown. Food delivery services have made for some of the hottest consumer tech apps in many countries. And in China, one of the most popular ones was called Miss Fresh.
But the neighborhood retail industry is highly fragmented, with local supermarkets and fresh markets struggling to meet consumers' evolving needs. What is Miss Fresh's solution? Standardize, digitalize, intelligentize.
That's a video from the Miss Fresh website. The company attracted global investors who had an appetite for Chinese consumer technology apps. Last year, Miss Fresh even listed on the Nasdaq and at one point soared to a valuation of $3 billion. Miss Fresh delivery people were zipping around the streets of China in signature pink shirts, loading up on groceries and delivering them to homes, including the home of our tech reporter in Beijing, Ryan McMurrow.
For consumers, it was definitely a good deal. The delivery charges weren't very high, maybe $1 or $2. So for my wife, when she wanted to get things fast, she would always open their app and load up her grocery basket and it would get to our door in about 30 minutes. So it was definitely one of our go-to apps for getting food.
And last month, Ryan was pretty bummed. He had to break the news to his wife that Miss Fresh was going bust.
So far, they're not officially bankrupt. In China, the bankruptcy process is not as smooth and orderly as it is in the US or the UK.
But he had found out that in 9 cities, the company had closed down most of its mini warehouses. Its business model was to blanket cities with small warehouses for faster delivery. And this was a big selling point to investors.
They have yet to turn a profit, and it doesn't seem like they ever will. So the investor money was just subsidizing these years of losses. I mean, they owe their suppliers lots of money. They've fired most of their staff. If you go on their app to try to order food, there's nothing that can be delivered. And I went to one of their mini warehouses and it was closed, but there was a worker there just checking up on it to make sure stuff wasn't stolen, I guess. But it was just in total disorder. The water tanks that usually hold fish were dry without any water. It's clear they're not doing any business currently.
And the company's stock market valuation is now less than $100 million, a fraction of what it was at its peak. Ryan says the collapse has shocked a lot of people in China, but the government seems to be turning its back on Miss Fresh and perhaps other high-flying consumer technology companies.
These companies like Alibaba and Tencent used to be seen as bringing China into a new digital era and really pioneering. But at this point, Beijing doesn't really see them that way anymore, and now has that same view for semiconductors and robotics, AI, those type of companies, and these like consumer internet companies. If one goes under, no one in the government is really going to bat an eye.
And what about the global investors who sank money into Miss Fresh?
All the investors like Tiger Global in a technology fund managed by Goldman Sachs, which put in collectively probably about $200 million. They almost certainly will not be seeing any of that money.
That's our China technology reporter, Ryan McMorrow. Japan's government is worried about how much young people are drinking. Well, Tokyo's actually concerned they're not drinking enough. Sounds weird, right? But the government gets vital tax revenue from alcohol sales. So it's launched a new campaign. It's a contest asking Japanese people between 20 and 39 years old to come up with ideas to revitalize the alcohol industry. Why target young people? Well, Japan's society is aging, and young people drink less compared to their elders. In fact, some don't drink at all. One official, perhaps desperate, perhaps clever, said he's hoping for some ideas involving the metaverse that might encourage young people to crack open more bottles. And hey, one more thing. The new season of the FT podcast, Tectonic, is out. This new series takes on the world of cryptocurrency, and spoiler alert, host Jemima Kelly is a bit of a crypto skeptic, or as crypto folks might call her, a salty no-coiner. Stick around after today's show for the Tectonic trailer. You can read more on all of these stories at FT.com. This has been your daily FT News Briefing. Make sure you check back tomorrow for the latest business news.
And that's all from the briefing for today. If you enjoyed this episode, follow Biz News Radio now to get all of our interviews and daily market updates as soon as they're published on your podcast platform.